but how much higher is the question. I don't know. So yeah, it's difficult. It's the same as the Nasdaq, as we spoke about earlier. It's very difficult for me at the moment to get in because it's short term, just very range bound, but it's also rejecting this previous high. And again, I'm not going to be the guy trying to buy the all-time high just yet. I want to wait for a pullback. So there's nothing to do at the moment. Bashi, technically, we are all liquidity traders. No one would be able to place a trade without liquidity. Do you think you can be consistently profitable with the chicken game? Do you mean the guy that got the chicken to take the trades for him? Is that what you're referring to? Oh, £400 profit, guys. Big boy money. Chris is here. Guys, Chris is coming to take over the show. Don't leave when I leave. You're in good hands. I will see you all very soon. Thank you for having me. Today's Friday, so enjoy your weekends. Guys, don't end the week on a margin call. I'll see you all soon. Stay safe.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Taking a look. It's a slow leak to the downside. We got some firm market maker action, though. I am not sure if we're going to have really much direction. I would kind of welcome it at this point. If we leak a little bit lower and break these lows, I'm hoping there's a push into the low 600s today. I say that because I've got some hedges. If it doesn't go anywhere, that's fine, I guess. But I've got a 605 by 600. And that's a $5 wide. That's a debit spread, and it only cost me 80 cents. And so if there's any reasonable push into 604, 603, 602 today, then I can turn that 80 cents into maybe $2 or $3 of credit, which would be pretty fantastic. So I'm not saying I'm cheering the market onto the downside, but if it does break these lows from yesterday around 607, I wouldn't mind seeing it go a little bit lower. It is a monthly expiration, and it is an OPEX. It's usually not as dramatic as what we have in March. But you never know. I don't know. I've seen some interesting hints like, do you remember back in 2020 when it was February? Oh, I got to show my screen, huh, Chandler?
Yeah, I was just about to say it.
I was just I love the Porsche just driving down the road. So I just thought everyone could stare at that.
Yeah, it's a chill view.
All right. Thanks. Okay. So anyway, I was talking about some of those liquidity levels right here. Sorry about that. So these are the lows from yesterday. I'm looking to see like if we can make if we make a break for the lows, do we have a bit of a drop? I've got put sentiment a little bit higher at 79-0. So I mean, it looks like the bull side is not really showing up today. Doesn't mean we have to have much direction. This market could still bounce off yesterday's lows and still be range bound. A lot of times with these market maker levels, they are easily defended. But what's kind of nice right now is in real-time SPY, there's some open space for the bears to travel to the 606 or 605. If we get really out of whack here, then possibly this way out of the money, push down to 600. But, we know that sell-offs can also drop quite a bit. So I've got a 605 by 600 that I put in yesterday. That's mostly a hedge for the week. It expires. I did take some profit this morning on a couple of trades. Carvana, I was looking for push lower. It's CVNA. Carvana going lower, so I took profit on that one, which is nice. EVNX took profit on this one, which is nice. And I've got a couple other ones I want to take a quick spot check on. Wayfair is at 43. This one really didn't do much. I need this one to be below 35. We're not there yet. I've got an expiration of this one out to next week. And then TOST is at 38, and I need it to be below 30. Okay, this one needs to be below 35. Wayfair, W, at 43. Yeah, I need this to be below 41. Okay. So I got a little bit of time on those. A little bit of a sell-off is totally great. W and TOST, if they sell off, excellent. Let's see what MSTR is doing. We're down to 323. I've got an expiration today. If we're below 315, that's getting into some profit. My break even on that one should be around 316 or 317. 317 is my break even. So I got a chart alarm set. Let me bump this up to 317 and see if I can grab a little bit more profit. Actually, 316 would be fine. Grab about $1 profit there. Let's see what we have. SPY, can we break the lows? We just tested yesterday's lower right there. All right, starting to see some levels light up a little bit. Okay, let's go. I might as well cheer it on now. See if we break the lows. Pretty interesting week. We did poke the all-time highs once again. We faded hard yesterday, and we are getting some follow-through. You know, I don't know exactly why. What's the reason? We did see some poor news this morning out of the U.S. PMI numbers were okay. Services PMI below 50, not a good sign, though. I will say that. Okay, services PMI below 50 is not a good sign. Manufacturing PMI has come out in a big way. That's what part of the inflationary push has been, is like, you know, manufacturing PMI above 50 for the first time in a long time. But services PMI, which is kind of our bread and butter, is we're a tech country and a services country, and seeing this below 50 is not a great sign, especially from a forecast at 53. So that seems like a big old whiff. And then on existing sales, home sales were down, which isn't a surprise with this unaffordable housing market. And then University of Michigan sentiment came in a little bit softer as well. But, you know, sentiment, I would attribute that to similar to like the AAII sentiment survey. What am I doing? There we go. Let's go to the tool. The AAII sentiment. So let's go to our risk on, risk off gauge. Here's my sentiment positioning. Here's your retail sentiment, AAII right here. So this should have printed February 17th. So this prints every Wednesday, I believe. Is that right? Or is it Monday? I don't freaking know. It prints once a week. But it was interesting to see this. Oops, let me change the color here. To see this kind of bearish sentiment, and yet the market went up to all-time highs. And then we're kind of back into, I wouldn't say neutral. We actually have more of the market bearish, but it's not extreme where I'd want to be a contrarian. So my point is, looking at University of Michigan here, if you come into the graph on consumer sentiment, okay, inflation expectations 4.3, that was forecasted, that was previous as well. Come into sentiment, take a look at the graph. I mean, looking back into pre-COVID, I mean, we were a lot more enthusiastic about the market according to this print. Obviously, we had our, you know, July, August, September lows. This is a good. This is how you play the contrarian side, right? It is so bearish out there and so I'll just say so pessimistic that was a buy signal. Okay, it was also so euphoric coming into 2019 and 2020. You know, COVID was the bow, COVID was the why, COVID was the excuse, but the market was already primed for a sell-off. Technically speaking, I was bearish going into COVID, not knowing that COVID was going to be the reason that the market basically imploded for 45 to 60 days. Right. But point is, that's how you use sentiment. When you have extreme positioning on one side or the other, you can be a contrarian. If we're just in the middle and just kind of hanging out here, doesn't really mean anything. So it's a one-off, but I do think that given the fact that we have poked highs and struggled to close above the highs, this is another good example of bull traps and bear traps, right? I'm not surprised that the technicals are aligning here to see that we have gotten up to the highs, but we're not getting any momentum above it. And I'm sure there's going to be some traders that look at this and see, like, you know, do we come back into the middle? I'm still trading a lot of setups where my wiggle room is down here. I'm trying to stay out of the way. If we have another sell-off day today, that'd be great, because I'd like to come into Monday and just sell more premium. You know, I'm always happy to see if the IVX is going to improve or the IV rank is going to get higher, especially in the indexes. Selling more premium is a good thing. Okay, so I'm going to take a quick peek at this SPY trade that I have. This was a hedge on the day. So my 605 by 600 right now is trading for 61 cents. Come on, baby. Give me a couple bucks to the downside, would you? All right. And then I'm just off all-time highs. I poked highs today around 190K in the portfolio, which is, again, off to a pretty good start. Alibaba I saw continue to go higher. Let's keep an eye on it. Let's keep an eye on it. Nvidia earnings, yeah, we'll see. Nvidia earnings, it doesn't necessarily mean it's going to be a good thing at all, right? Nvidia earnings, I think Nvidia is priced right where nobody wants it to be. Because if we're right here, is it good enough to, wake up the Mag 7 and start to lift the markets back up? Or is it going to be, you know what, Nvidia doesn't have the same exponential growth expectations, and it's like, it's not good enough. I don't know. Okay. I mean, I can price out. Let me take a look and see what Nvidia's earnings are expected to be. So Nvidia, so their average move is around 10%. You can see we've had some single digit ones, but we've had some teens and some high volatility as well. I'll say, 10% seems about average. Okay, so 10% move. How often do we get to a 10% move? Let's go back for the last, let's go out 8 to 13 days. There's kind of my cutoff. So we don't get there. We get there day 8. Okay, we get there day 3. We get there immediately. We don't get there. We don't get there. We do. We don't. We get there day 8. We get there day 3. We get there day 3. We get there immediately. We get there day 5. We get there day 13. That's like my least favorite. I'm going to cross that one off. This one, we get there day 8. Okay. So of that little back tested earnings, we have 1, 2, 3, 4, 5 no's. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 times we get there. And what I'm saying is, when I say get there, I mean to the expected move. So 11 times we get there, 5 times we don't. So the expected move is going to be around 10%. We're trading at $139. So that means we're going to have about a 13.9, right? Roughly 10% move on a 139.30 stock. You're looking at about a $13.90 to $14 move. Now, if I go in and see what the market makers are looking for, the plus minus on Nvidia for, let's say, I wouldn't really want to go out just to the 28th. I'd want to go out maybe another week. So the 28th, maybe take this in the first part of March. I mean, the market makers are looking at about a 13.24 move. Okay, so that's right. That's pretty much on par with, like, okay, we're looking at a little bit higher bump in earnings. If I wanted to say, you know what I could see Nvidia doing, if I went out to the end of March, like March 28th, or even into April, I know that's way out there, but what we could consider is, okay, now the market maker's looking at about a 20-point move. If I were to price this out, I'm just looking at like a straight up volatility play, because on this chart here, go to Nvidia. Just want to check on Netflix real quick. Netflix is good. This is a broken wing that's looking a lot better going into next week. I need this thing to stay above 10 or stay below 1040. Meta, got a trade on that one as well. Costco, this one's dropping hard. I've got a nice little broken wing butterfly there, so those positions are looking pretty good. I want to go to Nvidia. So Nvidia was coiled into all this. And so we just had like retests and a lot of volatility. We had a big, 25, 30% pullback there. What was that correction? From that retest to that low was a 26% correction. And then we came up, 25, 26% to the upside. But what I see right now is, I don't really see, I don't know. I honestly, I don't necessarily see it making new highs or new lows. I don't know. I'd almost consider taking Nvidia and saying, you know what, I think I'm going to sell premium. That might be one easy way to look at it. Or just, and don't necessarily do it pre-earnings, but maybe post-earnings. Because if it's post-earnings and this thing doesn't go anywhere, then a quick iron condor could actually be a pretty easy profit. But I obviously don't want to be selling premium and have this thing go so excited to go up that it's going to drag the SPY, the Qs, the Mag 7. It all goes with it. The one instrument, if you're looking at mags, this could certainly be moving more next week. Nvidia will definitely influence this instrument. So this is a Mag 7 ETF. It hasn't gone anywhere. I think the reason the market has been so quiet this year and so choppy this year is because Mag 7 isn't going anywhere. Everyone's looking for market breadth. Everyone's looking for some type of rotation into financials and rotation into industrials. That's great, but the reality is none of those sectors really lead in a strong bull market. None of them. Like having utilities, basic materials, industrials, energy, financials, if those are your leading sectors, that's not a really healthy bull market. In the history that we've seen, like the biggest runs of S&P and Nasdaq being up 15, 20, 25%, it is not led by those sectors. Now, I do think you have to have a necessary rotation because you can't have this high concentrated market like we've seen. You can't. Okay. But going into those other sectors to me means like those sectors don't perform as bad, but the overall market, if we just have this big rotation, I just think it's going to be like a choppy year, you know? And it's not like it has to be a bad year. It's just going to be it's going to be a weird year that everyone's looking directional and you're not getting any direction, you know? And so that's literally what I'm trading. For me to be sitting here at 180 grand in profit, I've traded little to no direction outside of being long gold, long silver. Bitcoin isn't going anywhere right now. And then Alibaba's been a nice winner of like 40 some dollars a share. Like that was a lucky play because the stock's up 70%. But other than that, we haven't really had a lot of direction. I've mostly traded non-directional strategies on indexes, and it's done really, really well. So I will continue to do that until I think there's more happening. Until I think I've got a better pulse of the market, which right now I don't. But coming off these highs, going into the next so we obviously have end of the month next month. So we have monthly expirations today, end of the month next week. It's a short month in February. Plus we had a short holiday week with President's Day on Monday. But my question is is this a high, a high, a high? Do we come back into the middle here, find some structure, or do we break back down? We can obviously see there's strong support through this election, right? This is the election structure. So we have lows, lows. I mean, I could see this level get tested, but are we going to come back and find this 200 moving average? Maybe. I hope we do, because this is where I've said this for a couple months now. This is where I'm going to be the most bullish in 2025. If we come down to a 144 200 moving average or anything below that, I will be scaling in and positioning for a 60 to 90 to even out to the end of the year type move. I do think the market finishes positive this year. I do. But if we have a 10% correction and then we get back up to 15% off that low, let's say we dip 10% and then we rally 15. Okay, let's see what that looks like. So if we have a 10% drop from here, that puts us down to like 5,500. This again, totally hypothetical. But if we go down to like 5,500, okay, just let me box that in. So that's a 10% drop. Now, if we rally from there to give us a positive year, let's say the market rallies 15%. Okay, so from 5,500 and it rallies up 15%. Okay, so that puts the market at highs for the year. Everybody can celebrate, everyone can breathe easy. The market didn't puke on itself and implode, but I could see us having that type of volatility. So if there's any opportunity for a dip or a pullback, this is where I'm willing to get the most aggressive. Okay, with options, not crazy greedy, but just deploying some capital, spacing it out over, probably 1 to 6 months. And if we get the move back towards the highs again, great. Because what does that look like? Well, probably having some, I don't know, maybe having some inflation data improving, and therefore the Fed maybe cuts a little bit more. Maybe that reassures the market. There's a backstop here. Trump's going to be more vocal. The dollar's going to get weaker. Yields go down. All these things are probably not a bad thing. Okay. The weird part is how do we keep climbing this wall of worry? That's what I don't understand. And I don't think that's going to continue to be a sustainable strategy. So because we've had a 20% year and another 20% year, I can see the market just taking a little bit of a breather, right? That's all. So, all right, let's keep going. Let's go to equal weight. If equal weight pulls back, I am probably going to be adding to it. Yeah, I mean, I'm in at 177. I've got a pending order at the 170s. If we have any follow through here, like high, low, lower, high, lower, low, I'll probably scoop up in the 160s again. But I'm going to keep a little allocation on RSP. Futures, I've got some hedges in. So you can see I've got some positions here that are paying out pretty well. There's bear traps or bull traps and bear traps and all that good stuff. I'm hedging on MES for some type of volatility squeeze. So either we go up and we break this top, okay, or we come back down here and we revisit moving averages. This is a volatility play that goes both ways. This is a hedge that is a low risk, high reward. That's what I'm trading on futures to hedge the portfolio. Okay, Nasdaq again failing at these recent highs. So is it this simple? We just have resistance here, and we have support here, and we're just going to go sideways. Well, if this picks up any momentum to the downside, well, we can definitely go sideways. We can definitely go high, low, and if you're smart, you'd be looking to buy this area. If we have a little bit more of a scare to this level, I still like the 200 moving average. You can see it's been touched and tested a lot of times, but it seems to be a pretty good buy zone. Okay, if we connect the dots here, I'd say as far as this structure goes, that would be like, okay, if we hit the 200 moving average, but we have like a lot of velocity to the downside, that's my buffer. So I'd like to buy there, but if it goes lower, I'm going to buy probably level 1, level 2, level 3, and try to get back to the highs for the year, and that'd be my positioning. So to me, like the most beneficial opportunity would be if we have a dip, I'd like to be deploying capital in this area. Otherwise, it is cautious and cautious and cautious. But if the market blows the tops off, that is fine. My portfolio is tilted slightly bullish. Positive drift, stocks go up. If we're rotating out and earning, I mean, everyone's still celebrating like Q4 earnings like it's the greatest thing ever. It's like, look, Q4 earnings should be good because it's still considering 2024's data. 2025 moving into this year, look, you got one of the biggest retailers in the world, Walmart, that is now being surpassed by Amazon because you've got consumer concerns. If Walmart and Amazon and Costco, your 3 largest retailers in the world, are worried about the consumer, that's probably an issue because everyone says like, oh, business profits are fine and consumers are strong and resilient. It's like, are they though? I think the consumer is stretched so thin that it doesn't take much for the consumer to say stop buying shit. If the consumer just breaks down and is like, I can't afford to buy all the stuff I've been buying, I can't afford to float my life in credit anymore and live on credit cards, something's going to break down to the consumer. You look out 2, 3, 4, 5 years, I think the labor market looks very different too. So all this like rainbow sunshine is going to stop at some point. We're going to have like a dark cloud over the market and we're going to have a reality check. But I don't know when, I don't know how, I don't know what, and that's not my job to know. Okay, I can be aware, but it's like I know a lot of good traders that are just it feels uneasy. Like everyone's so optimistic and everyone's so bullish, and I really don't understand why. And so that's like my contrarian-esque outlook, where I don't know if it's going to be the right play. I'm not one that's going to sit here and be doom and gloom and call the top because that's the dumbest thing ever. But I do know that I wouldn't be shocked to see the market have a correction of like, let's say 10% this year. 10 to 15% seems reasonable for the market to kind of flush it out, make everyone, I don't know. If you're interested in buying, you buy the dip. If you think the sky is falling, then maybe you're bearish anyway and you need everything to get to the downside, but you haven't had it for several years. So we'll see. Okay. Russell and Dow, I mean, the Russell is still not my favorite instrument. I've got some income trades down here. That's probably the extent of it. I don't love the Russell 2000 simply because so many of the companies are unprofitable. Until the Fed is cutting more rates, then I don't think this is going to improve too much. And also you have a lot of fat in the Russell 2000, right? If you want to trim the fat, you want higher profitability, higher efficiency companies, and like 70% of companies right now don't make money. And that's a terrible sector for me to play. Now, I like small caps because I want them to perform well, but I would rather trade IWI, IWX. The problem is I don't have the same liquidity and option plays that I do on IWM. But if I get the prices that I want, I'm willing to dollar cost average into them. So it could be just a simple cash allocation for this one. But I like these trades better because you get a little bit more top performers out of the top 200. I think that's a good way to segment the small caps. I want them to perform well. I want them to catch up and start to see small caps rally compared to large caps. But the reality is, and I said this yesterday, large caps can go sideways and then small caps can maybe catch up, or large caps can go down and small caps can go down slower. That's still catching up, right? They can truly catch up, or obviously small caps go up a little bit or large caps go up a little bit and small caps go up more aggressively. There's ways to catch up. Okay. But my point is, they can catch up also in a bad way. They can catch up where small caps are going down less and large caps are going down further. That's not good. And that actually is a broadening out. I don't think people realize that. And you know, I just think that's something you have to consider. The market can broaden out when everything is crap. Like 2022 on paper was a broadening year. We had a bear market, right? Everything was down, but the things that were already beat up and already crappy going into 2022 were already beat up so badly that when you had Tesla down, you know, 60, 70%, Meta down 70%, that was broadening out. You know, Mag 7 stopped being a great performer. All right, I got to check on the SPY trade really quickly. I do have to go here in about 15 minutes, but we're getting down towards 605.88, and that trade's a nice little winner. Let's go to SPY. This is my little hedge on the day. Right now it's trading for 83 cents. I'm right about break even. Come on, baby. Let's get a freaking big old hedge in here for the day. I mean, literally, I get a 604. I'm where I want to be. 604, 603, I'd be happy. 601, 600 would be just a beautiful day. Let's take a look at our levels here. Look, if the Bears want to travel into some open space, they have it. The Bears truly have some open space. So if we have this low breaking and we get some more direction, this open space would be pretty fantastic for a run to 600 today. Might be a huge, you know, turd sandwich for the market today, but I don't care. I don't mind seeing it. I don't mind seeing IV go higher. I want to sell premium next week anyway. I want to do some more income trades. So I'm going to say for today, I'm just going to cheer this on. So everyone put on their bear masks, cheer this thing on a little bit. Let's see if we can get down to the low 600s today. Technically speaking, we're cooperating really nicely. You know, we're coming off these highs. Qs we're you know, rejecting off those same highs. The Dow has not made highs yet, so the Dow's fading, also gapping lower. So Dow is underperforming in a big way. Russell, same thing. Volatility is up a little bit. So your one-day VIX is actually down slightly, but your 30-day is up by 3%. Not a huge jump in volatility though. I would say keep an eye on this though. If the VIX gets up to 20 or greater, 20 or greater, we've had those jumps, right? Gets to 20 and then it fades. My concern is that we get to 20 and we have another spike up to like 30, or we have another spike up to 60, right? Like one ugly volatility event. For what reason, I don't really know. But to go from like, you know, 15 to 19, not a big concern. But to go from 15 to 20, all it takes is that 15 to 20 to spike up from 20 to 30. And then that 20 to 30 spikes up from 30 to 50. And that's when volatility gets really nasty for a couple of days. Okay, but we'll find out. We will find out. All right. If we have a big drop or a big spike in the VIX, I'll be scooping up some SVIX or SVXY. I like that better. Dollar index hanging out there around that 106 handle. Oil is back and forth a ton. I'm still not going to touch oil right now. Natural gas up to some fresh, man. Yeah, I might be getting this crap called away. I might be getting UNG called away. UNG. Snap. This one gets called away today for profit. I'm okay with that. Do I want to roll this? I might roll this. Let me take a quick peek. I want to go to SMAP for a sec. So 1050. All right, stay above 1050 today. I'll just get this one called away. 985 gets called away at 10. I have 300 shares. I have 300 shares of Snap. If it gets called away, 1050 minus 9.85. So I turned it into a $195 profit. That is fine. So I'm going to see if this will stay above. I'm not going to do anything. Snapchat, if we came back down to like 850, I'll buy some more. But I'm going to go ahead and edit this and set a chart alarm at 1050. 1050 covered call strike. Or covered call levels, fine. So this is end of today. It's going to be close. If it's below 1050, then I'll go out another week and sell it. If I want to look at rolling this right now, I mean, I'm up 156 bucks on the covered call, which is income. It's up about 83%, but if it gets to stay above 1050 by the day, then I get it all called away. If I do a quick roll on this, if I roll it out a week, I get 20 cents. If I roll it out a couple of weeks, let's go into March expiration. If I rolled it, I mean, that's like adding an extra 28 cents to my bottom line and lowering my strike to 10. So I would get 985 minus 78 cents. I make my break evens out 907. I get it called away at 10. I make 93 cents on 300 shares. I make 279 bucks. But I got to roll this thing out by 28 days. I'm going to see if it gets called away today. If it does, cool. If it doesn't, then I'll work this down for another strike out a few weeks. That's an easy repair. All right, UNG, I need to take a look at this one because this has been a diagonal spread, and it's been like cranking to the upside. So let's go UNG here. Also, I could be losing some shares of OXY today. Yep, there's my collar trade. Get it called away at 50. That's good. Okay, this isn't bad. I've got a break even on OXY. I'm just jumping all over the place here. Here's UNG. I've got a 5 by 23. That's 18 wide. I only paid $11.23 for it. Right now, it's up 378 bucks. Out to April, if we're trading above 23, I do get this thing called away. Max credit would be $18. $18 minus the $11.23 that I paid would be $677 per contract. Okay, so I still have time in the trade. I might consider rolling out this call. I don't know if the expiration is what I want it to be, though, because I have to roll it out. I talked about this yesterday in my final hour session. If I roll this out to May, I get a credit, but I'd have to roll this out to June, another like 60 days more, which is fine. If I kept the same strike, I roll it out to June 20th. I get 93 cents, which increases my bottom line. If I roll this up $1, this isn't bad. I could roll it up $1. Okay, and also get another 60 cents on that roll, which also I like. If I roll it up $2, I still get 20 cents and then add to my credit by another $2. So to enhance this profit, I don't mind rolling out more in time, but getting, I don't know. I mean, I'm not really lowering my cost basis per se, but I'm giving myself some upside potential. But I wouldn't really want to take this roll unless I could get like 15 or 20 cents. This one is fine. If I get 40 cents, but I can increase it by $1, ideally I'd like to go up by $2 and change. So I'll put that on the to-do list for today. It's looking good. I don't have to do anything. I still get about $700 a contract. But if I wanted to increase the profit a little bit with a little creativity, I could with the roll. What was the other stock that I want to look at? I was jumping all over the place. Was it something that was in the money here? OXY. OXY. We got a nice little run towards 51. I've got a break even at 48.63. If I get called away, it's $1.37. I don't think I've really done much else to it. And I'm good getting the buying power back as well. So OXY, let's go into, so I own it at 48.63. And if it gets called away, $1.37 at 500 shares, that's not too bad. If I want to do a quick roll on this, there's my collar. So if I wanted to roll this entire thing, or even at this point, just rolling the call, let me just roll the call, I guess. So if I roll the call, we're trading at 51.42. I roll it out by a week. I get an extra 24 cents. That's not bad. That's another $100 and some dollars. It's out of the money, which is good. I mean, it's not bad. I kind of want the buying power back, but to get another $100 to the trade is not too shabby. If I roll it down there, I get an extra kind of 20 cents. I lower the cost basis by 68. That's not too bad either. All right, so I'm going to put Snap on the list. I got a couple things to do today, and then I got to run here in just a couple minutes. So Snapchat would be 1050 line in the sands. OXY 50. I'll put roll with a question mark. UNG, the 23 sell call. Would I roll that out to June? So this would be 228 for OXY. This would be June 20th for UNG. Snapchat by a week or so. What else? I think that's about it for right now. Watching the SPY, watching the indexes. That's a lot going on. It's a lot going on. What else? Let me check some expirations for today. MicroStrategy at 320. I need this to get down to 315. Here's my 320 by 315, this trade right here. So I'd like to see us push into like 316, 315. Right now it's trading for $1.73. I'm only upside down like $1.50. But if this thing can make a nudge, we're you know, my buy put is a 320, my sell put's a 315. If we fall I mean, there's enough volatility. We could clearly fall to like 315 today. I don't think that's an issue. It's right there on the edge of the expected move. I'd like to see it hopefully get pushed a little bit lower. If that's the case, I can turn this into a small winner. Maybe I can turn this into a 50 cent to $1 winner, which is fine. If I take a small loss on it, that's okay too. It just depends on the level I hit. What else is happening for my at the monies? Expirations for today. I've got a handful that I need to just double check. So I've got Tesla, income trades. These are ratio spreads. These are all looking pretty good. That's a nice little $2 and some credit. IBIT credit spread. It was a 52 by 51. That's for profit today. That's cool. That's up another 50, 60 bucks per contract. Microsoft ratio spread. That's full credit. That's up about 150 bucks or so, 170 bucks. 380 by 375. I got the 228 loss and the 395 win, so about $170 per contract. SPY, I've got a hedge trade on. I've got some out of the money hedges that are going to expire worthless. I'm losing 50 bucks on those. That's no big deal. Coca-Cola, oh my gosh, getting one called away at $69. Coca-Cola made a big old rip. I've got some shares. I still own the shares, and they are covered at 65. Fudge, man, I might do some rolls on Coca-Cola, even if I just keep it alive. I'm gonna look at a roll. Even if I keep the same strike and go out a little bit farther, April to May, maybe I get an extra 50 cents to $1 and just roll it, add to the bottom line. Another one to get some buying power back. What else? Snap, that's a roll. MicroStrategy I just did. OXY I just did. Coin. Okay, that's it. That covers all my 0DTs for today. How do you manage to control your emotions when you have a losing position, losing day? It's just a trade. Obviously, I'm not just a one trade person, right? So when I've got a losing position, losing trade, I probably have 6, 7, 8, 10 others that are doing fine. And in this case, I probably have 50 others that are doing fine. So it's just a trade. I spread it out. I'm pretty diversified. I dabble with a bunch of different instruments. And the reason why is because I trade very systematically, mechanically on a lot of things. And that way I let kind of the distribution fall where it needs to. Most of the time, the market in general is going to do something like this. Okay. Most of the time, you're going to see like a plus or minus. So like a plus 5% move or 0.5% move to a plus 1% move, minus 0.5 to a minus 1, right? If you think about how this, like, let's just scatter plot this thing, and I'll be really like rough here, but basically most of your scatter plots are going to be in here. Most of what the market's going to do is going to be falling in this area. This is like the thickest chunk of like every day markets are going to do this. Okay. Out here, you're going to get some outliers. Out here, you're going to get some outliers, but most of your trading is going to be in here. Okay. So there's a lot of ways to make consistent income. Even if you're trading out here, you make money a lot, but you've got to be risk defined to not get beat up and blown up by these outliers. But when the market does what it does most of the time, it's pretty easy. You take a lot of trades, space it out, have good defined risk, let the market do what it's supposed to do. Stay within the expected ranges. Most of the time, the expected move is usually less than or equal to, and mostly less than, the real move. That is why selling options makes people more money more consistently, because the market tends to overstate the expected move. And therefore, if you're selling that expected move and you're taking advantage of that, what the market makers are saying, then the real move is actually less than that, which means that your positions are usually fine. But you still want to manage early and often. You still want to be having risk-defined trades. I'm not an undefined risk trader. So the strangle strategies, the naked everything, like, I don't do that stuff. I'll do a cash secured put when I'm willing to own the underlying, but I don't just sell a put just because I want to. If I'm going to sell a put, it's because I'm willing to own it. Okay, so does that make sense? So a losing day, a losing position, it's just one trade. Now I will say this: if the market takes a giant fall, then yeah, this portfolio is going to look a little ugly for a couple of days, but I would be hedging. Number one, I'm always hedged out like 30 to 60 days. So I take usually like 1/4 to 0.5% risk, and that a hedge could pay me, a 0.5% risk could pay me 4 to 5% profit. Like, hedges are incredible payouts if and when they're right. Otherwise, it's something I'm going to sacrifice for my year, right? It's going to cost me probably between 3 to 5% of my gains, but it also has like a 5 to 10x like reward to risk profile if I ever get paid on a hedge. So it's worth it. Okay. And it also helps me where the market, if it falls and when my portfolio takes a hit, I'm usually profiting on that fall and I'm lessening the blow. So if I was down, I'm trying to think, one of my worst days last year might have been like $30,000. Okay. So if I'm down here, I got to go in 1 minute, by the way. If I'm down $30,000 right here, that's about 1% of my portfolio. Okay. But if I can have profits running on hedges that make me an extra 5K, then I'm not down 30K. I'm actually only down 25K. And then when I get back to those highs again, now I've got the 5K banked on top of getting back to my highs. And now instead of returning, I'm down 30K, but now I'm actually at the same level. I'm now 35K ahead. So it's just active trading, active portfolio management, having some hedges on. It's not fun to feel like you're wasting money on hedges. But the reality is, it's, to me, as a manager here, it's necessary. I got to. All right. I got to let you go. I got to bounce. It's 11 o'clock. I got a webinar. Thanks, everyone trading. Happy Friday. Thanks, everybody. Have a great weekend. I'll see you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.